basically, I'm putting all those pieces of the puzzle together to form a very risk-adjusted approach to try, obviously, to optimize returns and limit the downside.
Hello, you're watching Proactive. I'm joined by Adrian Rowles, who's advising Active Energy on its crypto treasury strategy. Adrian, very good to speak with you. Active Energy's allocated $100,000 into a basket of trending digital assets. Why did you choose trending coins like Solana, Binance Coin and Dogecoin over more established assets like Bitcoin for this initial allocation? And how does it fit your broader treasury strategy?
Yeah, good to see you, Stephen. Thanks for having me. And yeah, good question. So basically, we do maintain some Bitcoin in the main longer term treasury as a storage, as an asset of storage. So the reason we're going into some of these alternative coins is, well, firstly, today is Bitcoin's a major Bitcoin options expiry day. So in actual fact, what's the time now? So it's probably around now that comes to an end, or within the next hour or so. And that's probably the largest options expiry for Bitcoin for the year. And it's quite significant. So I've known that in advance. So I purposely wanted to avoid the volatility that could produce from the result of that options expiration date. And also the sellers, the short put options over the buyers, the long call options, are actually winning out. So it's been a prudent decision to delay a decision to adding Bitcoin at the moment, because you can see, if you look at any chart, it's under pressure and the price has been moving down. So we've got into some very trending alternatives that has strong communities behind it, strong news in the media, strong commentary on it, sort of narratives on it. They're very liquid, and it just seems a very good place to dip our toe in the water and start to position some of this money. And if it works out well, which I'm anticipating, the fourth quarter, the next quarter, is going to be exceptionally strong, whereas this September has been fairly weak. It's been a red September, actually.
You mentioned volatility, Adrian. So with crypto's volatility, how do you balance the potential for quick gains against treasury preservation, and what specific criteria guide your 30 to 90-day trading decisions?
Yeah, it's an important question. So from this, I draw on my institutional, professional portfolio trading and portfolio management experience. So I'm basically mimicking the institutional disciplines to manage the risks. So there'll be sizing limits, there'll be exposure limits, there'll be timing and duration limits. And basically, I'm putting all those pieces of the puzzle together to form a very risk-adjusted approach to try, obviously, to optimize returns and limit the downside.
I mean, you mentioned Bitcoin and AI hosting services. Can you elaborate on how these longer-term initiatives complement the short-term trading strategy and drive structural growth for the company?
We've got projects in the pipeline, so a good 10 projects in the pipeline already, and that is securing in excess of £10 million in revenue. And we're in the advanced stages of implementing that, so already initially started that. So that longer term revenue, which of course will be built on in the future, so it's already a successful run or a successful start, and looking to build on that for the future. And the short term gains, it could adopt and actually be a blend, short term, mid term and long term, with this surplus energy that we've identified or that the board have identified and secured to sell on to third parties. So think about this AI drive in the world. The energy, the grid, the electricity grid is just not there to support the drive. So anyone that can provide surplus energy and sell that on to third parties and other parties they're going to benefit from that. So obviously we're coming in as a small cap, small business coming in, but that will start at the top, that energy supply, and it will filter down, and we will quickly ramp that up to be a significant player in this alternative energy space. I think that's going to be, I'm optimistic it's going to be very profitable.
I mean, you previously mentioned your pipeline of 30 megawatts. Could you put that in context, how much energy that actually is?
Yeah, sure. So yes, there's a lot of terms. There's kilowatts, there's megawatts, gigawatts, etc. So basically, a megawatt is 1 million watts or kilowatts. So that one megawatt could run a solar farm or factories or even a big, large size stadium. So if you think we've got 30 megawatts in the pipeline, that's enough to run a small town for the whole year. So something between 30 and 50,000 homes for the year, depending on how many kilowatts an hour they're using. So it's quite a significant amount, and it is hard to conceptualize. But if you think of it like that, that's a small town equivalent of, so quite significant.
Adrian, you mentioned Red September for crypto. Could you give us your view on the correlation to traditional assets such as bonds?
Yeah, sure. I mean, in a traditional world, and before this particular alternative asset come into play, people, the general investor, was already disappointed with the traditional results of the financial industry, and also becoming more disenfranchised with the both public and fiscal and central bank policies. So everyone's looking for alternatives to drive revenue, to make up for their loss in purchasing power through the inflationary effect. And just last week, we had a couple of bond auctions with we had UK's bond auction, which was a really not a good auction. They had to discount the bond down to be able to sell the full amount of the bonds. That presents a concern over the economy, and basically a concern over the debt to GDP ratio. Obviously, your viewers probably are already aware of this, but that ultimately will be inflationary. So the bondholders are demanding a higher yield on their investment. So the same in America. Their 30-year bond was probably the weakest bond auction sale in the last, I'd say, about 5 years. So, but they're for a different reason, and they're more concerned about growth of the economy, because the economy of the US is coming out quite strong. So therefore, but both of those result means inflationary future. So even though the Fed cut rates, if you go back to the day when the Fed cut rates, from that point on, rates have rose. So for two different reasons in UK and US. But so when you come into the crypto or the digital asset inventory as a replacement, as an alternative, you can easily get access to these positions instantly, quickly, cheaply, and also there's no expiration date like there is on a traditional bond. It's a cash settlement. There's no delivery of when you're comparing to options and futures, etc. So I think it's a evolving space with new participants getting involved, which ultimately is going to drive the price higher because of supply-demand ratio. And then finally, the profile of the investor is vastly different. So traditionally, you had the long-term Bitcoin believers. Then you've got the ETF companies that have merged ETFs, so they're a different type of profile investor. Then you've got the institutions who are buying into that, and you've got the people, the latecomers, who are buying into that news, that launch of the institutional interest. So I think this price pressure is the result of those recent people selling off and some older people taking profits. But as I say, I'm expecting a very strong fourth quarter, and we hope to capitalize on that.
Of course, Red September is almost over, so let's hope those cryptos bounce back. Adrian, thanks as usual for your insights.
Thank you again. It's been a pleasure.
Adrian Rowles, who's advising Active Energy on its treasury strategy.